Welcome to Dividend Income. In this video I'm going to go through part 1 of stocks with high yields that have been set in my watch list. I'm looking at the dividend yield, payments history and their current financials, weighing up whether they are worth purchasing or to avoid. It is easy to be seduced by those high yield dividend payments. High yields are obviously appealing, but be careful of excessively high yields. There could be underlying problems with the share. This is because when the market suspects a company may be unable to sustain its dividend, the share price will fall and naturally push the yield higher. If a company suffers any negative shocks in the market, the dividend can be cut or in some cases stopped completely. An example of a company stopping its dividend payments is Disney. In response to the COVID pandemic, it stopped paying them in 2020. It has stated that it will pay them again in the future, but we do not know how long that will be. So are these worth buying? The thought of bringing that financial freedom date forward by a few years makes you want to assess the risk. I'm going to start with the lowest yield going to highest. First up is Global Ship Lease, ticker symbol GSL. Global Ship Lease Inc. was founded in 2007 and owns and charters container ships of various sizes under fixed rate charters to container shipping companies. It has a yield of 7.31%, a current price of $20.53 and a quarterly dividend of 37 cents. The payout ratio is very low at 17.84%. The payout ratio is a fraction of net income a company pays to its stockholders. I always like it if the payout ratio is under 50% of net income. This means that a dividend is more likely to be sustained in the future. The ex-dividend is August 22nd. You need to purchase stock before this date if you want to be paid for the next quarterly dividend payment on the 2nd of September. Looking back at the dividend payments, they paid dividends in 2015, then took a 6-year break before paying in 2021, and so far every quarter since, with an increase in last year. Global Ship Lease just had a great Q2 earnings, topping estimates. Revenue are up by 77.84%, net income up by 77.44%, and EPS beaten by 3.74%. The general market consensus is to buy. If we look at what analysts think, TipRank's market consensus has a moderate buy, with only one analyst saying buy, 0 hold and 0 sell, with a 12-month target of $25, so a 24.4% upside. Market beat analysts give it a buy rating based on 2 buying, 0 hold and 0 sell. Price target of $31.50, that's a 56.8% upside. Verdict on this then, I do think that they have been capitalising on the recent market turmoil. It will be interesting to see if the earnings continue at this level once everything subsides. As long as they keep on track in this direction, it is one I will start to add to my portfolio. Next up is Energy Transfer LP Unit, ticker symbol ET. Energy Transfer LP provides energy-related services. The company owns and operates natural gas transportation pipeline. It has 5 natural gas storage facilities in Texas and Oklahoma. It also sells natural gas to electric utilities and independent power plants. It has a yield of 7.4%, a current price of $45.21 and a quarterly dividend of 23 cents. The payout ratio is 54%, so that is sustainable. The ex-dividend is the 3rd of November and the next dividend payment is on the 18th of November. Having a look at its dividend history, it has been a bit all over the place. It has been paying dividends since 2012, starting off high with 62.5 cents a share, minor increases before cutting it in half in 2014, then a further cut in 2015. Fairly steady from there up until August 2020 before again slicing it in half. It has been steady since then with minor increases. If we look at the last major dividend cut, the company's financials were good, but they had a lot of debt and decided to repay that instead. Recent earnings reports are good, topping estimates, revenues and EPS both beaten, revenue up by a huge 71.81% to $25.94 billion, and net income up by 112%. What do the market analysts think? TipRanks has a moderate buy, with 2 analysts saying buy, 0 hold and 0 sell, with a 12-month target of 15 high, 14 medium and $13 low. So based on the medium, a 19.97% upside. Market beat has an analyst rating as buy, 8 buy ratings, no hold and no sell. They have a price target of $14.25, which is a 23.1% upside. So the verdict is, there is a lot to like about this stock. The fluctuation in dividend payments is worrying, but the financials are good and it's growing well. The price is low and that yield is high, so I may add a small holding and monitor the progress. Next up is Altria Group, ticker symbol MO. Altria Group is one of the largest producers and marketers of cigarettes and related tobacco products, the biggest brand being Marlboro. It has a yield of 8.2%, a current price of $45.21, and a quarterly dividend of 90 cents. The payout ratio is very high at 80%. The ex-dividend is 14th of September, next dividend payment is on the 11th of October. They have been paying dividends since 2006 and increasing the dividend year on year. The cons to this stock is it is a dying market, no pun intended. Smoking has been in decline for a number of years. A lot of countries already have bans in enclosed public places. Stricter measures are coming into play. New Zealand are introducing a law in 2027 that bans anyone born after 2008 from buying cigarettes. The new law will also reduce the number of shops that can sell tobacco from 2024 and allow only smoked tobacco products containing very low levels of nicotine to be sold from 2025. Other problems, it's failing at diversifying so far. Altria invested $12.8 billion spend for a 35% stake in e-cig Juul Labs. Juul's revenues were hit in the last quarter by 23% from negative press on teenage vaping and e-cigarettes. In June, the US Food and Drug Administration planned to order Juul Labs to take its e-cigarettes off the market in the United States. Juul won an emergency temporary court order blocking the decision. The ban has been put on hold as the FDA starts an additional review. That gives them a bit of breathing space, but it does not look good as, according to reports, Juul are considering bankruptcy. Normally, with such a high payout ratio, the dividend would not be sustainable. Altria has strong, consistent cash flow, which more than covers the dividends. The pros to the stock is it has massive market share. They have 48.1% market share in the US. Could increase prices with addictive products. Aside from Juul, they are trying to diversify more into other markets, and I do think they will eventually be successful with this. They are investing big in cannabis and have a 45% stake in Cronus Group. The global legal marijuana market is growing and is expected to be worth $102.2 billion by 2030, and Altria want to be a big part of it. They also have a 10% stake in AB InBev, a multinational brewing company with over 400 beer brands, including Budweiser, Corona, and Stella Artois. After the legalization of cannabis in Canada, AB InBev were going to go into partnership with Tilray to create CBD-infused non-alcoholic beverages. Tilray is a global pharmaceutical, cannabis lifestyle and consumer packaged goods company. They had pledged to invest $50 million in the new venture called Fluent Beverages Company. Each company would have 50% ownership interest, but AB InBev quietly ended this partnership. Now, Labatt Breweries, a subsidiary of AB InBev in Canada, will now fully own and operate Fluent Beverages. Now, why would the partnership end? Drawing the dots together, could the Cronus Group now provide the missing piece? I'm speculating here, there has been no news, but it would make sense to partner on some products, which would be highly beneficial for Altria. Now a quick look at how the stock has been performing. It has been a roller coaster of ups and downs, having a few levels of support around the $45 mark. The big drop here was the FDA planning to have Juul e-cigarettes removed from the market, which I've spoken about already. It is now back up to the $45 level. So let's see what the analysts think in terms of projections. Market consensus from Tim Franks is a moderate buy, with 4 analysts saying buy, 4 hold and 1 sell. 12-month targets at 59 high, 47.56 medium and $36 low. So a 5.34% upside from here. Market B has an analyst rating as hold, 2 buy rating, 6 hold and 1 sell. They have a price target of $47 with a 4.1% upside. The verdict then, smoking is in secular decline, but nicotine is highly addictive and other investments in smokeless tobacco and nicotine pouch options will help. I do think they will successfully break into other markets eventually with Cronos and AB InBev. I've been on the fence about this stock, but now I'm ready to buy. I will start adding a small holding and keeping tabs on the progress of the company. That is the end of part 1. It takes a while to put the videos together, so I will be posting part 2 at the weekend. Thanks for watching. A quick disclaimer now. As always, you should do your own research when investing. I'm not a financial advisor, and these are my personal views. The purpose of this video is to give you additional information and hopefully help in making informed decisions. Thanks for watching. If you enjoyed the video, please like and subscribe.